This is our third IAS1 video, and this is more or less on the statement of financial position. Now, in the second video, I have referred to definitions of current assets, current liabilities, non-current assets, non-current liabilities. I'm 100% sure that you know what our definitions are and that you will be able to write it down in a test or exam. Now, in the statement of financial position, there's not a lot of surprises. We have adhered to about a very large extent already to all the requirements of IAS1 in the statement of financial positions that we've done up till now. So here and there's a difference or slight additional thing that you have to do, but we have covered more or less the requirements of IAS1 in the statement of financial positions that we've done up till now. Now let's see what items need to be presented separately on the face of the statement of financial position. The first one, property, plant and equipment. Now we know it's only a one-line item, and we know that we have to give them a note. And we know that the note is the IAS 16 note that we've done on property, plant and equipment. Investment property, goodwill and other intangible assets. Those three items you're only going to do next year. We're not going to do that this year. Financial assets. We have done financial assets and investments in the first semester. So you know that you have to disclose that as part of non-current assets on the face of the statement of financial position with a note that's going to explain what the nature of those assets are. Then under current assets, the first one is inventory. We've just done the IAS 2 notes on inventory, so you should know exactly what to write on inventory. We've done in the first semester the trade and other receivables note. We've done in the first semester the cash and cash equivalents note. That all adhered to IAS 1. Then on the other side of the statement of financial position, we get equity and reserves. Equity is a little bit different from what you have, and the reason for that is not really that it's different. The reason is here we are working with companies. IAS 1 is only to do with companies, and therefore the equity section looks slightly different from that of a sole proprietor or a partnership. Then non-current and long-term liabilities, non-current and current. Non-current we've also done in the first semester. You've seen that there's a note attached to that where we actually take the short-term portion of the long-term liability out of the long-term liability and transfer that to current liabilities. Deferred tax, you're not going to do deferred tax this year, so you can ignore that one, as well as provisions. We've already done the trade and other creditors note, so that one you should know how to do. And let's have a look what our statement of financial position should look like. Guys, and it must look like this. No funny stuff, no additional information. This is the line items I want to see in your statement of financial position. Starting off on a separate line right on top, the name of the entity that we're busy with. ACCC 121 Pty Limited. Statement of financial position as at year end, which is 31 December 2020. If you have written statement of financial position of ACC 121 Pty Limited, no marks. You will see that you are granted marks with IAS 1 and disclosure for the way that you disclose an item. So if you do not disclose it 100% according to the statement, you will not get one single mark. As a matter of fact, I can deduct marks. Good. Then a subheading, notes. Now that refers to the note number of the item, which is better explained. So if we look at non-current assets, property, plant and equipment, the IAS 16 note, the number of that note is going to be note number 2. Right, so here subheading note 2020 rands. The denomination, currency, very important. So we're going to show all our figures to the nearest rand. And then our comparative figures, 2019 rand. Assets, non-current assets, property, plant and equipment, note reference, total of property, plant and equipment for this year, and then the total for last year. Intangible assets, which you're not going to use, Financial assets, that for sure you can have, which will include my investments. There is our note number. You know that you have to distinguish if you have investments in shares, whether it's listed shares or unlisted shares. You must also state the number of shares, the entity in which you have the shares in, the cost price of the shares, and the current market value of the shares. If you have a fixed deposit which exceeds more than 12 months, the expiry date is longer than 12 months after the financial year end, then the particulars of that fixed deposit will also be disclosed in this note number 4. Then current assets, inventory, we've just done IAS 2, which is all about inventory, so you know how to disclose inventory. That is 100% the disclosure requirements. Trade and other receivables, there's the note. We've done the note in the first semester, so you know exactly what the note looks like. And the same applies to cash and cash equivalents. Also a reference to the note. We've done that in the first semester, so you should know exactly what it looks like. Can you see that you can, under no circumstances, forget the first semester's work, because you're going to be examined on all that work again this semester. Then the other side of the statement of financial position is our equity and liability side. Also the note, 2020 Rand, 2019 Rand. Now this is the equity section, because IAS1 only is applicable on companies. It means that we are not going to have capital, only capital, but the capital that a company has is share capital. So under capital and reserves, ordinary share capital, share premium, and we will do these kind of transactions once in the next study unit when we're starting off with companies. Share premium, 12% preference share capital, revaluation reserve, and we've dealt with that one before. If we have bought an asset at 2 million Rand, it's now worth 5 million Rand. We debited the asset with 3 million and we credited the revaluation reserve with 3 million, part of our total equity. General reserves, now that forms part of equity, but under the New Companies Act and IFRS statements, it is not allowed to create a general reserve for the rainy days anymore. Retained earnings. What does retained earnings mean? It means if I made a profit and I did not distribute the profit to the owners of the entity, so the company retained that profits for its own use, that will be shown under retained earnings. So my profit for the year will be included in that figure, and if there was previous year's profits which I haven't distributed by ways of a dividend to the equity holders, then that would have been added to this current year's profit in order to show my total retained earnings. Non-current liabilities, long-term borrowings, that we've done last semester, the whole note, so you must be able to disclose that note. Other financial liabilities. Current liabilities, trade and other payables, we've done that last semester, must be able to do that note. The short-term portion of the long-term borrowings, that is in that note. Clearly, I'm going to repay some of that loan in the next 12 months. So we're only going to show the portion which is longer than 12 months from year end in this long-term non-current liability section. And those repayments that's going to be made within the next 12 months is going to be shown under current liabilities. Other financial liabilities, income tax payable, income tax. Now we're working with companies, a sole proprietor, a partnership, it's not a legal person in their own right. So therefore, they don't pay tax in their own right. However, a company is a legal person in the eyes of the law. So therefore, they are liable to pay their own taxes, and that is income tax. Now, on what do we pay income tax? We pay income tax on the profits of the company. So if the company made 100 Rand profit at the end of the year, the company has to pay 28% tax on that profit. So 28 Rand of the 100 Rand has to be paid over to the receiver of revenue. So the year would have been 28 Rand. We would have reduced our net profit before tax for the year. It was 100 less 28, so 72 would have been our retained earnings for the year. So the 72 would have been part of the retained earnings. Provisions, we're not really going to do provisions this year, so that you will come across next year as well. Total liabilities would be my non-current liabilities plus my current liabilities, and my total equity and reserves will be my total liabilities plus my total equity. Now that figure, total equity and liabilities, that must balance back to my total assets. So my total assets, that amount and that amount should be exactly the same. What if nobody actually does accounting? Except accounting students and side work examples are real figures, so companies don't have to pay for the work. This guy is very much confused. I can just look at his head to gather that myself. So, no, I can assure you that there is accounting in every single business under the sun, and your exercise is not based on actual figures. So you just have to know and to learn how to do the things. And all of us has felt like this poor guy in our lives. When you are trying to balance something, whether it's a statement of financial position, a cash flow statement, whatever you try to reconcile, and it doesn't want to balance. Yeah. And then we all feel like this poor bloke. Good. We're going to continue then in the next video with a statement of profit or loss and other comprehensive income.